Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. I'm Joe Nikruto and Dan Hussey.
How's it going, everybody? It's been a big week for us, Joe.
Big week for you. We've got a new addition to the team. Team Hussey.
Team Hussey grows by one more. James Patrick was born on Sunday. On Father's Day, I couldn't have asked for a better gift.
Congratulations.
How about that timing, huh?
That is awesome.
Thank you. Yeah, we're excited about it. He's a good little fella. Mama and he are doing great. We did quick 24 hours at the hospital and we were back home right away. So
24 hours and out.
Yeah, really. And it's funny. We have good insurance too. I'm sure they were begging us to stay. It was hysterical. They're like, "Are you sure you want to go? You don't need to go.
Yeah, on the third one,
more days." They're like, "We can bill you for a couple more days."
Just have Amazon ship them to us.
One of these, it's funny. One of these days, that might actually be what happens.
But that's great news to get in and get out like that. You know what I mean? A lot of folks that are challenged and have to sit there for 3 or 5 or 10 or 15 or 20 days to get in and out in 24 hours. That is a true blessing. Congratulations, sir.
Thank you so
everybody
much.
Out in Zaner Ag Hedge and the Zaner Ag Hedge universe will join me in congratulating you and saying, great job. You did all the hard work. Now it's time for you to rest.
Yeah, I actually head up Costco today and a little price check on some stuff because my wife and I are, of course, back to enjoying our summers. I was staying dry for her sake. And on that front, Costco, I saw, and I couldn't believe this with my own eyes, only $15 a pound for bone-in ribeye tomahawks. Absolute
prime,
steal
too,
at
from
that
the looks
price,
of it.
right? Yeah, it was prime. It absolutely was. And a great marbling, really impressed there. But man, this kind of ties into our inflationary discussions we'll have later in the broadcast. That, wow, any type of inflation that was built into this market, it seems like is being taken out. And gasoline there, which I know this price is still probably high for many of you across the U.S. because at $3.89 a gallon for E10 at Costco, I was pretty impressed to see that prices are coming down already as well. But I know for some with our, 60-cent gas tax here in Illinois, it's probably a lot lower at home for you.
I saw, and that was great work you just did there for, in case the IRS is watching, you tied your trip to Costco into business there, and so fully deductible. That's a brilliant thing. Brilliant thing that you just did there. The price of gas here in this neck of the woods in suburban Chicagoland, some spots $3.45 yesterday, and in other spots $2.79. And I just thought, where do I live?
$2.79. Good sir.
Where do I live that I have to have the more than 50-cent stupid suburban person tax put on my gasoline? But I'll tell you, Dan, I don't really.
It's got to be in that state that begins in I and ends in S. I'll tell you what.
They got to get their stuff together here in this neck of the woods. They've got that Illinois, let's use all of their money for taxes thing going on. And that's what a bulk of that gas price is. But as you get a little further south, down into God's country here in Indiana, they don't have that tax thing wired up just yet like they do up north. And folks can expect to pay less money for a lot of things, thanks to them not having a handle on taxing citizens to death. Stuff is changing so fast, and I think this week has been a fine example of that. I felt yesterday, Dan, I don't know about you, that maybe we were going to add back some risk premium into corn and wheat, and soybeans would be able to hold on to here comes China premium. And today, only in the soybeans, huh? Is that what you're seeing?
Yeah, I mean, I think we got to be at least somewhat impressed by the fact that corn had a bit of a key reversal panning out there. You don't love that it couldn't get out over some of those technicals. We'll get into that in a minute. But I think you're right, Joe. This market is really hesitant to, I think, come back and believe what we're seeing. And we're seeing it, like seeing flash sales and that. Those are indication that somebody is in here chomping. If it's in the unknown category, I think we all say tongue in cheek China. But at the end of the day, we were talking about last week that we'll believe it when we see it. We're seeing it now. And I don't want to say shocked, but I guess not that impressed yet that the market hasn't responded, although I'm anticipating maybe next week is where we start to catch that here into that end of the quarter. We've got acreage reports. We've got a holiday coming out with July, and the need to build it back in some kind of weather premiums or any type of premium into this market is definitely there. In other words, we've hit such an extreme pessimism. The selling pressure has built up to such a level that you would imagine. You
catching that?
Yeah.
Dan, I want you to know that is the Chinese pronunciation of unknown.
Okay. I'm like, you are throwing me off my game here, Joe.
Not at all. I have been thinking about posting this in the Zaner early morning wire for days, and every day discretion gets the better part of me. But
That
here
is too
today,
funny.
here is just so everybody knows what unknown means in Chinese. Wei che. So for a lot of that, for beans, a big chunk of beans in the unknown and outright Chinese destination category for those sales this week.
Yeah. Yeah. And like I said, we'll believe it when we see it. Well, folks, we're starting to see it. And again, into next week, I'm wondering if we don't pick up right where the bid starting yesterday left off. And why don't we get right into that soybean number and talk about November beans?
For sure. Let's switch over from corn to November beans. And
I guess we'll have to come back to corn. I didn't realize.
We'll get there. On the weekly, we opened at 11. This is November beans, 11.45 open. The high was 11.60 and a quarter. Low 11.30. We closed at 11.56 and a quarter. That was up 13 and a half. So beans, you're really getting
week over week. That's
not
progress.
bad at all, right? Yeah, that weekly chart does not look bad. And I'll bet on the daily chart, we're going to be seeing the same thing, huh?
Yeah, we got out over that 18-day moving average and the 100-day yesterday. Today was finding the 100-day as support there for November beans at 11.50. That was a really good, I think, strong move. You ended the day almost with a doji, but that nice long tail, meaning next week, I'd love to see this market pick itself up. I don't want to say gap up, but definitely start off and start attacking that 50 to 55-day moving average area around 11.65. There's that downward sloping trend line against the highs. And if you just simply take a look at this chart and say, oh, look at that big old head up towards 11.20, neckline down at 11.30, means we're probably in the November beans going to be heading to form that right shoulder somewhere up in that 11.75 to 11.80 area. That's a good 30 cents higher from where we are right now. And so I think there's a high probability of the market continuing higher in that regard, considering, hey, we're seeing the Chinese bid. We're seeing those flash sales. We're back out over some technicals that we otherwise had fallen and stayed below that 18-day since May 26th, I think, was the first close below it. So that's a big technical reversal at this point on yesterday's outside day reversal higher.
So interesting that you blow through all of these moving averages yesterday like they're not even there. And
just like a hot knife through butter, right?
Right. Just jumps right up through those levels. But yet today, now we're going to go back to trading technically and respect that 100-day moving average. Got down, tested it just a little bit there. Mm-hmm. So if you got long yesterday afternoon late and you were a weak hand, we would have placed our stop at 11.49 and a half.
Yep, you would have gotten probably triggered by it, right?
Sure enough, they'd like to come down there and see just what you got in terms of fortitude or some sort of discretion or risk management. And those folks got stopped out and bam, up to 11.56 and a quarter, which to me is just a tremendous, especially in front of a report on, I believe, Tuesday, right?
Yep.
We come back
I think Tuesday. That's right.
And it's a big deal to trade this way here today into the end of the week. So a lot to look forward to.
Yeah, it makes you wonder if the trade isn't seeing what we're seeing and thinking what we're seeing. I'll report next week. We got a little overly sold, overly bearish here. Now we actually have that bid back in the cash markets with flash sales. Maybe they've turned the tide here and now money flow is going the other way. Because yesterday's volume wasn't massive, but it was certainly an uptick relative to the last week of volume for sure.
Acreage-wise, average guesstimate 95.1.
I'm glad you're on top of the game here because I've been out of it for this last week.
And certainly I'd have folks double check me when it comes to numbers, but USDA for March, 95.3. So we'll see. The question was, as we were, you know what? I apologize, Dan. That's a number for corn.
I was going to say
a corn chart. Those are corn
89,
chart
right?
numbers. So average guess 85.2.
85.
USDA in March was 84.7. But that early look into the corn numbers there should serve us in the next set. But 85.2 average trade guess, USDA in March, 84.7. So we'll see what happens here.
Yeah, and a quick comment on that. We've been ahead on planting pace here in a really strong planting pace. Usually, and this is from Ted's mouth to my ears, we're usually ahead on that corn number then, and corn acres usually end up being more robust at a time in these types of conditions. We'll see if that plays out on the acreage report. So for sure. that could mean, right, that maybe there is a little bit that pent up need for acreage to signal for a little bit of a higher November price if it comes in a little shallower than that trade expectation.
D's corn opened the week at 445. The high was 446 and a quarter. The low 431 and a half. We closed at 441 and a half. Down just 2.5. The same look that you got in beans, not as great but corn did find a new low for this move. I'm not sure if that's contract low. That might
Yesterday.
be contract low.
For December corn, it does look like that is a contract low for December corn. So this is a true key reversal, folks, which is a outside day higher off of a contract higher low. Today's close, you would have wanted to see it close out over today's high, but you know what? I think that's par for the course right now, considering the absolutely nasty sell-off we've had in corn.
For sure. Now we've got a long way to go. When you look at that daily chart, you're reminded of how far we have fallen from roughly 510 to yesterday near 430. That's a pretty darn big drop. And I have to look at that, and I think maybe we don't have time for me to get all crazy, but
crazy.
That just seems overdone. It really, really does seem overdone. I recognize it in some spots. Guys got corn up to their head. Our man Sherm's got some great early planted corn down in southern Illinois. Here in northern Indiana, we keep getting rain event on top of rain event. A lot of this stuff is waterlogged. A lot of it does not look great. I'm not looking to analyze anything out my back window, that's for sure. But I don't believe that we're quite in the shape that the trade thinks we are. And certainly you think rain makes grain, but I think this is going to be a year where you get a test to that and you see what people are able to do here in terms of, or what people were able to do in terms of cost of inputs and how close we're going to get to these trendline yields. I just don't think it's one of those years. And the corn market is acting like this is already in the bin.
Agreed. And I think that there's something to be build on what I said there for the beans. Fast planting pace usually means those corn acres are more robust, which means if we did in fact put in a little bit more corn acres, a little shy on the beans, you now have an issue of waterlogging on that corn that's out there. A lot of yellowing, and guys are reporting all throughout the United States issues to that capacity. And if that's the case, then you're going to build and compound on your issues down the road because, hey, some of that washout is never going to come back either. And you're just going to lose now the corn acreage number. Now, it's not going to show in this report, but your final actual harvested acres at the end of the year will have a much smaller number and definitely lower yields if that's the case.
Average guess in corn acres, 95.1, USDA 95.3 in March.
Okay.
The surprise here would be, we were asking after we all got together the other day and folks were asking, what's the surprise? Like if we're going to be surprised by anything, I think the answer to that question is the surprise could be higher corn acres than anticipated.
Yeah.
Do you agree?
I would agree with that. And I wonder if then the trade doesn't shrug that off a bit because, we have a very technical reversal on good volume. We got to get out over that 18-day moving average. But what's the narrative that goes along with this reversal and build some weather premium? We got big corn acres, but we got problems with weather and water.
And really great demand. You see it week after week. If we continue with this demand pace,
we've never questioned corn's demand at any point this year, 100%. And I'll add to this too. I was talking with one of a cattleman I chat with on a regular basis. He was mentioning how we're going to have to continue to bid up cattle, and we'll get to that in a bit, to compete with Mexico, who is now putting more cattle on feed because they're not walking them across the border. So now we're creating this other problem in the cattle market of having Mexican cattle being put on feed rather than walking across to the United States. And they're happy to ship then beef instead. And likewise, that's going to mean probably stronger corn demand and more exports south of the border as well.
That's a silver lining. Certainly, I really do not enjoy talking about us exporting our export market as we have done here over the last number of years. But if we can sell
silver lining
corn,
for corn demand, maybe
more corn, that'd be great.
Terrible for our cattlemen, great for the corn market, perhaps.
September wheat opened the week at 615. The high was 620 and a half. The low was 584 and 3/4. The low 589 and 3/4. Goodness gracious, that was down 24 and a quarter in wheat as the funds have prosecuted a let's get short campaign here in the last week.
Yeah, this is one of those, I don't want to just blatantly say problem spots on the board, but this is where, the notion that maybe we would carry through from that rally from last week, get up towards that 650, 660 area, at least make a right shoulder for the head and shoulders. You hate seeing us fall back down and close right on that 200-day moving average around that 590 figure this week. Can't get out and hold over the 18-day as well. That's been resistance now for 4 days basically in a row. 100 to 55 and 50-day moving averages up around that 616 to 628 is a bigger area we found resistance from. So still the notion that we're trying to hold this 590 area as supportive is still there, but man, you hate seeing us close down on the week and the day right into those figures when last week we were singing a tune of optimism.
Last night, I'm sitting here looking at this chart, making plans for what I'm going to do when it gets to 630 and a half. Today's price action not only caught me by surprise, but left me rather demoralized for the September wheat futures in Chicago. That inability to hold that moving average there at 590, that's a bad deal. And as we always say, bull markets, or in this case, bullish corrections, right? What we're trying to build here is a correction back up towards 630 after this big sell-off. Bullish corrections do not live below the 18-day moving average. If you're below the 18-day moving average and you can't get over it, you have to recognize what is afoot and take stock in a real way. And so one of the things that I wanted to bring up is that this whole heat wave in Europe seems to me like they're going to have trouble with wheat.
Yeah, that's a good point.
And there should be some sort of risk premium being established here in the U.S., especially for this Chicago contract. And there just is not, and quite the contrary, down 11 3/4 on the day. And so it makes me wonder, does the market know that this situation in Europe is not impactful as it pertains to availability of wheat for them? Is it because the Russians are going to be able to export enough to cover any shortfall? I don't know, but I do know that when I look at that chart, yuck.
Yeah, right. It technically looks bad. The narrative is there for maybe some support, which, okay, maybe that's why we didn't flush these levels today. But unfortunately, that's just going to mean we're going to have to come back next week to see what they do with it. Getting down below that 590 area, you see 580. I do think you got to wonder if a new contract low down at 540 is in the works. And you just got to be careful with that. Because I agree with you. There is the narrative that we could flip the script, but the technical picture isn't there supporting that idea at this time.
Not yet.
No, which we like to see that confluence between the two, right? You want to see the technicals pick up and a narrative behind it. And now you've got a good reason to hop on the train. Right now, it seems like the world is just discounting the idea that there's problems with other wheat markets and even some Southern acres there for our own. But hey, at the end of the day, you can't argue with price. And we're at one of those lines in the sand. We'll see where it takes off or does not next week. Inside
week in bean oil for August, this is an August contract, opened at 68.68. The high was 69.94, low 67.55. Last trade 69.82, up 139. Inside week and rather muted price action for usually high-flying volatile bean oil. Bean oil taking a little bit of a break here. What would you attribute that to?
I think crude oil, obviously falling back here, has taken some of that energy bid out. I think bean oil was the main recipient of that in the row crops, mainly because, as you and I both know, and we talked to ourselves who were blue in the face over the last couple of years of why bean oil was not becoming a bigger portion of that energy bid. Obviously, this last year, we saw how that actually came to fruition. Technically speaking, we broke below that kind of neckline at that 71 figure. We got below that 18-day moving average, have held it as resistance, found the 50, 55-day area as support. It failed, and we went right down to the 100 days. So still a very technical chart in terms of the levels that are being respected. But I do think the fact that maybe energy markets have turned over and rolled over here, you're going to see some of the wind out of the sails for bean oil. We did pull back into this old congestion range from March through April around the 66 to 68 area. So we're definitely down into like that first support. But man, you break below 67.50 again, it's a long way down to the 200-day at 59.55 and that old consolidated range from October through December into the end of last year, which launched from about 50. So we'll see what happens.
But if you hold that 67.55,
sure.
If we hold that, what is that? That's a 100 bar moving average there at 67.55.
Yeah, that's the 100-day. That's correct.
Technically, if we do the right thing and hold that and we start to advance back up into the spaghetti, 10-day, 18-day, 50-day, if this market could get out over that, I suppose you are in danger of some type of right shoulder action near 75.
Yeah, I mean, at this point, I feel like we've broken that pattern a little bit here, at least in the August. But I think there's that neckline you got to get back out over, plus the 18 and 55 days. So this 71 to, let's call it 71 to 72 area is going to be a tough nut to crack. But you get through that, now you're talking a move back to highs again. So we'll see what it looks like. The market wants to go back up there to test old support now as resistance. And if it does hold as resistance, we know what the game is. If it doesn't, you're going to have the oil share continue to grow.
And I can't do the math on that myself, but if you have crude oil that gets taken out of the equation and then bean oil kind of has to stand on its own, and as you mentioned, that product share re-strengthens, that could be, to me, that's a signal to where bean oil is going to, everybody
It's
knew that this crude
bullish
market was going
demand
to be
for the
short-lived.
yeah, bullish demand though for the bean complex, right? It
Right.
doesn't help our row crop or doesn't
Out,
hurt our row crop.
outside of war premium. So they pull the war premium out and bean oil still manages. And that's when I look at this chart, I see, okay, bean oil has held up rather well considering the amount of premium you've taken out of the actual crude contract. We're knocking on the door of $60 crude, I think.
Yeah, absolutely. And here's just a quick overlay, right? Look at how much further crude has fallen compared to bean oil since their tops. Obviously, crude oil topping a little bit, running the gambit and going a little higher. But crude oil is what looks like is only up 10% since the start of this chart. Bean oil is still up 32 from the start of this chart. So obviously, crude oil has had a lot of that war premium knocked out of itself, but bean oil is holding relatively a lot stronger. You would think at these current prices, bean oil should be at least down to that 200-day moving average or down to that 55 area if it were following crude at this point, but it's not. And I think that you're very wise to point out that the reason is likely because of that change of demand is sticking with the oil. Or
The
bean oil, not
the game
crude.
has changed. Before
Right,
you were
right.
shipping all of your hard-won oil that you wrung out of the beans, you're shipping into Krispy Kreme and Dunkin' Donuts and myriad other food and beverage providers. But now some of those bins are headed for different places, and that
biofuel and all the other demand
for sure.
Which I also think there's something to be said for. There was concern that a lot of that demand might go to other veg oils or to beef tallow, to these other things. But it's interesting that some of those ancillary products have now come into consumer demand, like beef tallow. So beef tallow is probably has more value being sold in jars at Costco than being refined into biofuel at this point. Yeah. So we're not going to see those other products that might be a better fit for making a biodiesel. They're going to go to other places as well. So there's lots of shifts in consumer demand that I think are paradigm shifts, and a big reason why when you look at that oil share chart and you look at other things, the game's changed, just like you said.
Soy meal for the week, and this is an August meal contract, checking up here after a couple 2-3 weeks of lower prices. Opened at 301.30 in the August. The high was 306.80, low 299.60. Last trade we see is 304.20. That's up 290 on the week, and similar to the bean oil, different looking chart, but after some pronounced movement lower, we're taking a breather above that 3 even number, maybe establishing a base or consolidating, waiting to see if this market has to trade lower. But
I mean, you look back on the weekly chart, this is where support's been, right?
I was just going to say
300.
Yep.
Buy it all has been the move. So, and great weekly volume. Obviously, some of that attributed to the roll and the fact that August is now our front month future. But when you get down to the daily chart too, you can see very strong. Somebody's in here participating on the buy side. Not out over that 18-day moving average. It comes in at 305.50, but man, did it try this week. Next week, if we get that move up, I think it's right up to that 155-day and 200-day moving average, which are all basically the same print around that 314, 315 area. I don't think it would take very much to send us back up halfway in this range that we've otherwise been in for bean meal.
For sure. Jumping quickly to August feeders, we opened 369.40 in the August. The high was 377.40, low 367.12.5. Closed at 369.85, up 325, but well off the highs, almost doji on the weekly, and did not make a new high yet.
Yeah, I guess I should have that weekly up there. You can see it here. No, it didn't. But I will say that where we closed leaves, I think, a lot of room for the market to find support around this area if it wants to. We're still far off from the 1855 and 100-day moving average down there, 362, 360, and 359. So I think that's a major supportive area right around 360 if we pull back again. But man, this market chewed and worked to get through those moving averages as well as this downward sloping trend line after that massive reversal day from the 355 area and that massive support. So we were talking about how you could have this right shoulder. If we get out over that shoulder, what does it mean? Boy, we knifed right through it. And as we both know, sometimes that failure of the head and shoulders pattern can be a very bullish signal. Yeah, we would have expected it to maybe break out of the high, but it still got you back to that highs, a triple top kind of forming up here. And as I mentioned earlier, without cattle walking across the border and south of the border, we're going to have to start bidding up to get them over here when it comes time to be herd building time, which means these prices have nowhere to go to the downside. And I think that the sell-off in late June there, or early June, to start and set the lows of the month, in fact, I think that was the commercial interest, finding out how low they could drive it and how low they could get it to scoop this market back up before inevitably taking it back to highs. Today's close was a bit off highs, but if you look at our 2 and 3 day move, where, like you said, you're still up on the week, you're still making higher highs and higher lows in the swings. And again, I see support just lightly below us if it even wants to pull back any further.
And for feeder cattle, I don't think either one of us would be surprised. We have taken out what you and I considered to be the right shoulder.
Yep.
We have made a run for 380, fallen back a little bit here in the last couple of days. But to me, and maybe I don't want to speak for you on this, to me, it does not surprise me one bit that feeder cattle is going to take a quick break and then shoot out. It's got to gather itself before it can really take out that 380. You want to talk about August fat cattle real quick?
Yeah, just one comment about the feeders. You got this megaphoning, right? You had a swing high, swing low, new highs, new low on that June start. It makes sense for us to megaphone up to 390 to 400 on that expanding range.
Shout it to the hills. August cattle, we opened them at 248.50. The high was 250, low 245, 47 and a half, closed at 245.82, down just 80. But August cattle, same kind of story here. Even on a weekly chart, looks like consolidation for a move higher.
Yeah, this is when you come over to the daily. The weekly looked like, oh no, a red candle forming. You come to the daily and you say, oh, geez, that looks like just your quintessential bull flag. And it really does.
For sure.
18 day and 100 day or 50 day moving averages just below around that 243.50 area. 100 days been beautiful support back in March, again in June. We haven't touched the 200 day ever on this chart. And we just keep all of these, well, at least back to December, right? For at least the chart of August, the 200 day moving average doesn't come in until after December. So we have not touched it yet. This market's going to need just a nice little push to break out of that 250 figure and print a new all-time high.
To close, put a number on that all-time high. Where do you think we make it back to before we pull back? If we do make it to new all-time highs?
Oh, like I think pullback. I think this 243 or 243.50 area is a beautiful support. To the upside, real quick, just drawing like a quick channel on this chart, right? I think you could push towards that 260 figure
easily, right? 260, 265 for sure.
Yep. Just simple technicals there, folks. Nothing crazy.
Great analysis. Dan, I'm going to say again, congratulations. Good work.
Thank you.
On the third edition. You guys are just doing great. That is the American dream right there. I think I'm required by law to say that it goes very fast. Enjoy every minute of it. And you're doing great things.
Thanks, Joe. And thank you all for listening to the Zaner MarketCast and checking in with us today. If you need more just because you can't get enough, which I know you all can't, you can follow us on Facebook, Twitter, and LinkedIn at Zaner Ag Hedge. If you really like this, we'd appreciate you commenting, liking, and subscriing to this podcast to not miss a beat.
Do us a favor.
With all that being said, have a great weekend, everybody, and we will be back as price action develops.
Have a great weekend.